The first thing I want to go over is um, so we're gonna do that 1K challenge to $1 million. Let's try for $1 million. Okay, and you guys think I'm crazy, right? Everybody here thinks I'm so crazy, right? And I'm gonna ask the same question that I ask everybody, okay? Here's the same question I'm gonna ask you guys. How many of you guys in this room how many of you guys in this room that have been with me for more than a week have seen at least 3 doubles called out in this room? At least 3. Okay. Let me ask you a question. How many have you seen doubles called out that were very easy doubles? Just last Friday alone, Marcus saw 3 doubles. Yeah, Marcus, we had more than 3 doubles last Friday. The last 2 Fridays in a row were double after double after double, 100% wins. This is why I love trading on Friday, guys. Excuse me, right? So check this out. If you put $1,000 in an account, okay, forget years to grow. This is going to be periods, all right? 10, 100%, okay? $1,000 in an account, you double it 10 times, and you keep letting the money run. Keep the money in, don't take any out. You just double it. You need to put $1,000, and you need to double it 10 times. Okay? AJ, that's what I'm working on right now. And I'm going to talk to you guys later to see how you want to do it. Okay? There are to different people, money, $1,000 means something different to different people, right? For some, it means a lot. For others, like me, still means a lot, but I can lose $1,000 on a trade and not be upset. Okay? Does that make sense? You know, my position sizing is such that if I lose $1,000 on one trade, I'm not going to cry over it. Okay. So what I did in toss, I had taken an account out of toss, and I took out the whole number. It just left $32.74, so I could keep their I rounded up to $100, the $100, just so I could keep the live data. I left $32.74. This, I believe, will clear on Friday, by Friday. Okay. Yeah, I'm going to put everything I do, I'm going to type out 1K at the end. So, this may be done by next Friday. I really want to mainly trade on Friday or really good trade setups, okay? And we'll determine how we're going to do the trades. Are we going to go in, say 25% of capital each time? Try shoot for doubles? Or how are we going to do it? Because guys, last 2 Fridays, Facebook has been doubles. Was it Facebook? Facebook and UVXY and SPY have been doubles for us. 100% winners for us the last 2 Fridays. You guys saw that all, right? Who saw that? That's been with me the last 2 Fridays. I think every Friday those have been doubles. 100% wins. Right? 100% wins. Okay, I want to go over this morning the Facebook trade with you guys. Okay. This was what I was seeing on Facebook today. Okay, this is the open range indicator that I use. Okay. This is how Facebook traded yesterday. Gap up, consolidation. Okay. Yeah, UVXY did. It did, Marcus. And Facebook last 2 Fridays have been what I consider extremely low risk doubles. Okay? I mean extremely low risk. Because it was right, I believe it was right at that 105 level. Facebook was. 2 weeks. So look, this is what I saw today. Alright, you had this. You had a gap up. Actually, you didn't have a gap up, but you had this move here. See right here? See this move up here to the opening range? So your first candle defined that opening range. Let me make it bigger. Okay. This first candle defined the opening range. Okay. This move to this move on those options. Second candle came up the top of the opening range. Couldn't take it out. This move to this move was about $30 a contract. Okay? Then it came back up. It hated being up here if you looked at the level 2. I said to you guys, Facebook hates to be above 110. Alright? Hates to be above 110. So I took it short really quick. It moved fast. I was out of the trade. A few of you guys got the trade. Okay? This was money, guys. Now, I had no desire to take Facebook long, and at least 3 people in the room said I lost money taking Facebook long. Not sure why you were taking Facebook long. Facebook right now is struggling very hard with 110. And not only was Facebook struggling really hard with 110, guys, look at the Qs today. Now, I'm not saying Facebook's going to crash. Qs were weak today. So this was a mess. So if you were taking Facebook long, you were taking it long in a non-trending market. Like at least 3 people in the room were. Pick your battles. This move here, second candle, it came up to the top of the opening range right here. See that candle right here at 110.15? Do you guys see it? Yes or no? Yeah? Talk to me. First candle did this. Second candle came up. Top of that range. Couldn't take it out. You're short Facebook. 110.14. It goes to 109.29. Almost $70 a contract on a Delta 70 option. Okay. Guys, plan your trade. Okay. We got to plan our trades. Let the trade come to you. Okay. Right? Let it come to you. Then what does it do? It rallies back up to that 110 area that I talked about where it didn't like being. And what's it do the second time? Comes right back down to the bottom of the opening range. Goes up to the top of the opening range. You could have taken it short right there if you missed it the first time. Then it goes from 110.14 all the way down to 108.82. That's over $100 a contract. Some of the guys in the room were taking it long here. Why? It's below S8, 21 EMA. Here's where you would want to take it long into the close. Easy to trade Facebook, guys. Facebook is easy to trade. There's doubles every day on Facebook, almost. Not lying to you. We trade this a lot on Fridays. Let the trades come to you guys, everybody. Okay, I want to go over LVS too. LVS is what we call an imbalance play, an OI imbalance play. Who knows what that is? These trades are set up very specifically. The reason we went in LVS puts yesterday, I'm not even going to use a 5-minute chart, is there is some call OI on LVS way down here. That's all in the money. Big boys do not like calls to be in the money at expiration. So there was possibly an incentive to sell it off. We got in at like 51.50 and it sold off. We got in right when it was rallying up. We got in. We got out yesterday for a double. Okay. It's a bullish chart. I know. It's a bullish chart. Okay. And today it caught a bid with the market. But that trade yesterday worked. And there's a few of you guys in the room, and a few of you guys have done these trades. You got to go in small on these. Put in like $100, $50. All right. Now, with that said, we're gonna do the challenge. I've been purposely not calling out a lot of trades because few of you guys are new, and I want you guys to sit back and watch the room. There's some amazing traders in this room. Some really, really amazing traders in this room. So, yeah, I don't even use Max Pain. I don't look at Max Pain. I look at where the where there's a strike with a lot of calls and a strike with a lot of calls or puts. So there on my option chain is going to be hard to show. So let's see here. Detach. See, here's what I look at. I think Max Payne is not. I think what Moto was looking at here. He was looking at, I believe, going out to the monthlies. There's all these calls down here. If you look at LVS, look. Yeah, I don't know. Like Apple Max Payne. Apple Max Payne has never played out right. So Moto, I believe, was looking at all these calls here on that monthly chart, I believe, and actually here, no, too. He was looking at all these calls. All this call I see is they're gonna wipe it out. But guys, as Moto was telling me, there were many times you guys could have got doubles on LVS yesterday. Some in the room closed it. Moto came in this morning, closed his out for like a double or close to a double. It just ran the opposite way the other day. These are not trades that you want to be relying on for your income. Okay? And you're not going to be putting a lot of money in those. Does that make sense? It's a bullish chart. But Justin, we got a 100% win on that bullish chart yesterday. Some of the guys get in at 40 cents, get out at like 86. Those 50-50 puts. I said today it still may work because LVS gapped down with the market. Right? So it looked like it may still work. I had one contract. I made my $50. It was stress free. Okay. It was pretty stress free. Yep. Moto was asking when he got the trade. He says when he gets 100% win, he gets out and he got it. Now look, guys, we still have to keep, listen to me, alright? You still got to keep this on radar, okay? This still may work again. You may have another chance on this, right? Especially if it comes up to like 51.80 again. You still may have another shot, okay? So I want to draw the horizontal lines. But I'm telling you one thing, everybody in this room, alright? And I know a couple of you guys, even that have been with me for a while, one is not here. One of your biggest mistakes that you're making is you're seeing everybody else do a lot of trades and you feel you got to do a lot of trades. So let me ask you a question. Do you want to trade a lot or do you want to make a lot? What do you prefer to do? Trade a lot or make a lot? Some people like to trade. Make a lot, alright? They don't go hand in hand. Okay? Trading a lot, trade a lot, and make a lot don't go hand in hand. Trade a lot is like an addiction. You probably, I shouldn't say this, maybe better off starting smoking if you really have to do something all the time. It's not going to be as good for your health, but you're probably going to save money even when you pay for the cigarettes. Alright. 2 ways to trade LVS right here, right now. Okay. When I mention on Stock Twits, you hear me say it's a bracket trade, right? You guys know what that means? Yes or no? Who knows what a bracket trade is? Okay, see, the regulars do. Okay. So, LVS, you got a gap up, right? Take the top of the candle. You can even take the body candle. There's two ways to trade this. So, after the first day, it did what it did, right? Bracket trade, you can either use the close of the body if there's a big wick, or you can just bracket the trade. If it breaks above, you go long. If it breaks below, you go short. All right? Does that make sense? Yes or no? Talk to me. I'm bracketing it. Breaks above, you go long. If it breaks below, you go short. Now, that's one way to trade it. How many days do I take? What? For what? What do you mean days? How many days? There's no days. You got to wait for it to break the bracket. It may never break the bracket. So if you were doing a bracket trade on LVS today, it was actually a long when it broke the body of that candle. All right? Yeah, it is. I'm just bracketing. I'm bracketing a candle. Later, Steven. I take the first candle break. All right? But for an OI trade, OI imbalance trade, we know there's a lot of calls down there that they may wipe out. So it's a different style trade, right? Right? We're not looking at this bracket. So let me show you another bracket trade. This is an example to give you an idea. Microsoft. Earnings. Earnings was this day. Okay? See this day right here? This was earnings, right? Orb is usually intraday geo, right? An orb trade is usually... Listen, when I do my opening range trades, okay, I do them on a 5-minute candle at the open, right out of the gate, because I want to catch a move fast, and I need a pivot point to take it, either long or short. Okay, a lot of people use a 15, 30, and 60. At 30 and 60, you could actually swing trade. Many people swing trade off at 60. I take the bar when it breaks. Okay, look. Hey, Andre. First day, earnings. It gapped up. What did it do the second day? What did it do the second day? Did I ever trade the second day? Yes or no? No. Yeah, we did make good money. Actually, Daryl, no, we took it before earnings. We took Microsoft before earnings. Remember, we took it before earnings. We went in the calls because they were so cheap. What happened on the third day? Third day. So what you have to do when you do your bracket trades, you got to go here. You got to plan it out the night before, after you see it, right? You got to set an alert, enable alert, however your platform does it, to your cell, to your email, to whatever. So if price comes in with a certain range of the top or a certain range of the bottom, you want to know about it. It broke the bracket at $54. It came down to the standard line, bounced, broke the standard line, okay? Fought the cloud, broke the cloud, boom. Nice trade, guys. Broke on the third day. Where's Microsoft now? At the top, coming into the cloud. That's a bracket trade. It's the same concept as, okay, it's for the most part the same concept as how we trade the opening range. Yesterday, Microsoft established an opening range on a 5-minute candle. between 51.15 and 50.92. This is actually a 10-minute. It broke above it, okay, and was off to the races. That break above that candle, we go long. Okay, today, a lot of you guys are saying today's trading was tough. Well, yeah, look at today's trading, guys. How do you trade this? Okay, you didn't have, once you get to learn to trade too, you're going to recognize this market. You're going to look at what you saw on this market and say, this is not a great day for day trades, for options. I'm burning, because options, unlike stocks, have theta. You would have looked at this and said, I'm not trading this, day trading this, right? Yes or no? Talk to me. Would you? Would you try to take a trade in that today? No, come on. Yesterday, broke the opening range. Would you take a trade in that? Sure. Small cloud, easy to go through, boom, 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 right? Okay. Yep. Do not trade a flat line, Daryl. You don't have any advantage. You want to be trading in this market when you have an advantage in this market. Peter, on these ones here, they're on your gappers are your gaps. They're your top and bottom. You take your first candle. If there is a wick, right, like this one here, you can actually, on this daily, you could actually do the wick too. You could bracket the wick and take it short on the break of the wick, if it's like a big wick. But let's just, for all practical purposes, it's your first candle. Yeah, I am Gregory. I want you guys to follow this link too. I want you to watch these videos. These are the ones I really want you to watch, and then I'm going to go over how I trade. Okay. On my day trades, I take it off the first 5-minute candle. I like to be in and out. And guys, these can be money if you catch a move. Okay? If you can catch a move on yeah, Peter, the bracket trade is for gap ups. However, Leonard has something that he does a little different. I think he does it with weeklies, ATRs. I mean, okay, here's the deal. You can do it on any candle you want. So, what's the first day of the trading day? This was Wednesday, right? Let's see, Wednesday, Tuesday. This is Monday, right? You could bracket Monday if you want. Okay, here's Monday's candle, right? This is Monday's candle. You could bracket Monday's candle if you want. Okay? So you bracket Monday's candle. Then Tuesday, what did it do? Tuesday at 51.58, it broke through the bracket of Monday. Right? You could have gone long on that break. Or you can bracket last week's if you want. Last week's trading range. If it breaks out of last week's trading range, you can go long. So you can do it how I like to do it on the gap ups, because most of your gap ups are going to be on certain news that's going to change the dynamics of the stock that typically will reverse itself or go higher, right? Steven, you gotta depends on how you're doing it. You gotta set your stop based on the fact that you're trading options. If you were trading stocks, you would be short Microsoft at $54 with a stop at 55.13. Okay, your stop would be the top of the range. Now on options, as options traders, we cannot sometimes do that. We don't have that flexibility. So you have to determine based on a percentage basis If it's this is small enough so that you can set your stop at the top of the channel, that's where you want it to be. Okay. Otherwise, you got to go back into a percentage that you're willing to risk on any given trade. Does that make sense? No, Peter. And the problem with the single biggest problem with doing that, Peter, is usually the gap up you get a gap the next day. Does that make sense? So it's not like you're getting a gap up and then just follow through on that gap breaks. You're just getting gap after gap after gap. The SPY is a little hard to do that on. Right? Now today you could have done this. You could have just said, I'm only going to take the SPY long if it breaks high a day. Okay? Here. You got to design your system, right? So you could have said, here's my candle for today. Right? You could have said to yourself, so you bracket the day, I'm only going to take the SPY long if it breaks high a day. And then I'm going to go long. Right? That could have been your trading plan. Long at 198.15 and you would have run to 199. That could have been how you trade the SPY. Okay? Problem is you're getting gaps. You're getting to the point where this next trade here, you've already gapped up again. So you're not breaking a range, you're just gapping above it. You're gapping above your bracket. That's the hardest part about trading the SPY right now. Okay? So it's about, guys, it's about you having a system. Or looking at the systems that the different traders in the room have and saying which one you feel comfortable with. It's got to fit your personality. Okay? Does that make sense? You can't go in blindly. If you don't feel good about a trade, don't take it. Right? Right, guys? Like Marcus. Can I use you as an example, Marcus? A little bit. I won't say everything. Marcus said he's blown up a few accounts, and this is before I started talking to him. He fell in love with, he's a healthcare professional, and he fell in love with Gilead. He thought he knew everything there was to know about Gilead. And he got lucky a few times, made a boatload of money, and then you know what he did? Gave it all back. Because he didn't really have a rhyme or reason, right? Okay? He had no rhyme or reason what he was doing. Okay? Now Marcus is trading UVXY. And Marcus, are you doing good at UVXY? Yes or no? Okay. Why are you doing better trading UVXY than you were trading Gilead? Roughly. I want to see if I get the answer I'm looking for. Why are you doing better trading UVXY than you were Gilead? He plans his entries and exits. Yep. Gilead, it was an emotional attachment to, no technical reason, just with, and what changed Marcus a lot was, guys, you got to watch the Feb webinar we did. Marcus draws his levels, and he waits for it to hit the level. I seen him say in chat, you got to wait till it comes to here, and then you can take it. Yep, exactly. He will say in the chat, come to here, let UVXY come to this level, and then he will take it. He doesn't have to be in the trade. He's got his levels. If it comes to him, it comes to him. If it doesn't, it doesn't. Let the trade come to you, guys. No one in this room should take a trade you don't understand why you're taking it. Because listen to me, I want to say something. There's going to be hundreds of trades in this room. The market is open all the time. At least the futures market, okay? If you are addicted to trading, the ES is a short right now. I mentioned it was a short a while ago. The ES, I just got a short signal on, but it was a short here. But it's not 1938, say 50, all right? But it was actually a short when it was coming up here. Market's open, guys. You're going to get trades after trades after trades. You don't have to prove anything. Don't prove it to yourself. What you want to do is, everybody knows you can execute a trade. Even yourself knows you can execute a trade. But can you execute a trade profitably? That's what you got to prove to yourself. All right? So, let the trades come to you. Marcus is a really good example of someone that got lucky trading Gilead, trading this mess. Made a lot of money, then blew it all up again. Then found UVXY that he can use oil and SPY to trade UVXY with and get his levels. He likes it. He's making money. Okay. And once again, you could have done a sit here and done a bracket trade on UVXY here, and say I'm going to go short. If it breaks here, you would have got stopped out. If this went down and up, but you would have been short at 33, you would have got out 31.7. Now my trades tend to be on UVXY today. I was looking at the SPY, and there were a couple times when the SPY was getting top heavy, and I knew it was going to pull back. And I said take UVXY at 32 off the bottom. 32 is a new pivot on UVXY. Right? So 1K to 60K, Marcus, and what? UVXY? Or was that Gilead? Yeah, Gilead. He did a lotto trade in Gilead on calls. But he gave it all back. No, it's not nice work. He gave it all back. He didn't know what he was doing. So he buys $1,000 lotto ticket or whatever and turns into 60K and then gives it all back. Not nice work. He didn't know what he was doing. What time frame? What, Vince? Talk to me. It was over a few months. He did a couple earnings trades, but he gave it all back, guys. That's a loser. Marcus is a loser. He was a loser on that one. But now he's a winner, because you know why he's a winner? Even if he has a losing trade, at least he knows why he lost. Right? And you can accept that losing trade because Marcus knows that if he follows his plan is working. Right? Your plan is working. You know it's working. You know you're going to have losers. You have a loser, you move on, you get out of it. You don't get emotional, you don't get upset, you don't get stressed out. Right? You know there's going to be an opportunity because you have confidence in your plan that whatever money you lose today, you can make back on another trade. Because you know, once you have confidence in your plan and you actually see it work with real money, then you know in the future you're going to have a chance to get it back. And then over time it's going to work. If we play a game where you toss hit a coin flip 6 times, right? 2 times I may be 100% loser if I call heads, right? If you say heads or tails and you only flip it twice, I may be 100% loser, right? Yes or no? Is there a chance you could flip 2 heads? It's a pretty good chance, right? Okay. But if you flip it 1,000 times, there's no way I'm going to be 100% loser. It's going to revert to the mean, the average of 50% roughly, right? So the more you do a system, the more you understand the dynamics of the system. As long as your system works, over time it's going to be a winner if you got a winning system. Your next 5 trades in your system could all be losers, but then the next 20 could all be winners. Yep. And the worst thing is doubling down on losing trades and hoping it comes back. That's how you lose big. And Marcus and I have been there, done a little mentoring with Marcus. And I say, dude, you're doubling down. Okay? And Marcus says, yeah, I'm getting out. And he gets out. Don't do it. Doubling down on a losing trade is like stepping in dog poop with your right foot and seeing another pile of it with your left foot and stepping in it with your left foot. Okay? You've already stepped in it once. Why do you want to step in it a second time, guys? Don't do it. Just hit that exit button, say I'm done on that trade. If you get a better price, go in. Doubling down twice is being dumb twice. Ask me, I know. Yep. Okay, so biggest mistake most traders make, doubling down. You got to decide what you're going to do. It's okay. You know what? Many traders will scale. I will scale into a position. Okay, like a SPY puts position, I'll scale into it. But it's planned ahead of time. Does that make sense? I really planned it ahead of time. I know I can't pick a top or a bottom. But if I'm going to be in a position, I have no problem scaling into some positions. Okay? Makes sense? Do not be scaling. Do not be doubling down on UVXY. Both, Gregory. It depends. I can do both. Facebook, it tends to be one I may scale into for day trades, especially on Friday. Last Friday, let's go to 5-minute candles. I'll show you guys. Last Friday, I scaled into this because I wanted more. I really wanted more on Facebook. And the second entry I got at a better price actually. So I was doubling down a little bit, I guess. Last Friday was on Facebook. We had this. Let me show you. Today is Wednesday, Tuesday, Monday. This was Friday. This was last Friday, guys. This was a gift last Friday. And I called this out in the room too. Everybody heard me. So last Friday, right? Look at this opening range you had last Friday on Facebook. You had like $1. This candle, guys, was sick last Friday, right? It came up here. I got in, I got out, and it looked like it wasn't going to break above. I got in again. I was scaling in. So what I did is I went into 109 puts at first, and then I went into 110. So I was in both. I was in both the 109 and 110. I didn't scale. Actually, I didn't scale it. I just added the 110s. Because I really wanted exposure. This was not going to break 110 last Friday. Okay. When you learn how to read the level 2, which I'm trying to teach a little bit. You guys have been I've been showing my it's 2x VXX. I've been showing my time and sales, right? You guys have been seeing that a little bit. My time and sales, how to read the tape. I could tell you last Friday, this was not going to break 110. Period. Facebook last Friday was not going to break 110. Okay. I mainly used time and sales. Right up here, volume was high. Just flash red all the way, all the time. Okay. This is why today, back here again, today, for me, this was a gift. This right here is a gift. I popped up that level at the time in sales. You could just see the sellers piling right up every time this came up. This is all retail buying this. All right, but look at how clean Facebook was as a trader on the opening range, guys. All right, it came up the second time, tagged the top of the opening range. You had a trade here at 110.13 to the downside. Okay, this move was based on oil. Whenever you see a move like this that was purely based on oil, okay, here's the deal. Oil reverses itself. You guys know that, right? Oil loves to reverse itself. So this move came in on the oil report. Okay? And it came up to an area where Facebook doesn't like to be. Right? This is why that move happened. Okay? This looked toppy to me today. I'll be honest with you. This looked like it was topping out. Now, end of the day, they came in and bought. And I do have SPY puts I'm holding overnight. So I have to see how those are going to work out. IWM has an amazingly strong chart, guys. Don't fight this. If you want to fight IWM to the short side, how would you trade this? You have 181 puts, Peter? Not that far. I don't know though. Actually, I don't know. How would you trade this? Let me look at SPY. Here's how you trade this. Okay. Draw your trend line on IWM. That's a beautiful 45-degree angle. That's amazing short squeeze. No, not 100%. Big money makes their trades at the open. So here's what happens. Okay, so Marcus, here's the thing about this 3 o'clock power hour. And read Wycott, some of his readings. So, power hour, why do stocks move many times at power hour? Anybody know? Let's say you are a fund and you want to get in a stock, right? Now, let's say you want to get in a stock and you're big money, okay? So all throughout the day you've been buying 1,000 share lots, 5,000 share lots. That's true too, but you've been buying 5,000, 10,000 share lots, right? You don't want to drive the price up, right? So you're going in 5,000, you just every little pullback you're buying, right? But then it comes around to 3 o'clock and you still got only 75% of your position. As a big fund, what do? They buy the rest. Some of the guys will buy the rest. And then you do have market makers and mutual funds rebalancing too, Daryl. Chart like this is a beautiful short squeeze. Or just a stock under accumulation, right? Every dip's getting bought in a nice 45-degree angle. From 103 to 106.27. IWM is not as fun trading anymore. This thing used to move $3 in a day when the SPY wouldn't move at all. Now it's only moved about $3 this whole move. Alright. Not as good. But if you want to take IWM short or long, draw your trend. Keep it simple. Okay. Let's go over levels on the SPY. Alright. Facebook, why? See, big picture. Alan's saying big picture. Facebook keeps climbing. When do you sense a step out of the way? What do you mean, Alan? I'm telling you, I'm not bullish Facebook. So, I want to explain what I'm looking at on Facebook. look at your look at your volatility on Facebook. Okay. See your volatility here? Your volatility was not all that great here. Do this move, right? Now, volatility since this earnings date has increased dramatically on Facebook. Typically, increased volatility in a stock, wild swings in a stock at a high, is a topping process. Okay? However, Facebook, as I say in chat, is not the easy one to short. You got to respect this thing. Because Facebook does have a bid under it. Alright? I would not, I personally myself, if I was a holder of Facebook, wouldn't be feel overly good in this market holding a long position in Facebook at $110. Okay, that's just me though. This to me looks like a big bear flag up until a fib level. Okay, that's what it looks like to me. That's how I'm treating this. So let's see though. Facebook could come up. I can tell you right here, Facebook hated being up here. This was all retail buying. Facebook hated being up here. These big candles like this is big money letting retail buy it. This right here was your reversal day. Clear as a bell. If anybody was long Facebook and they didn't see that as a reversal day, shame on them. Amazing reversal candle. Yeah, it is. I mean, I know. So it depends on the market, man. If you look at Facebook, it's probably one of the best companies when you're talking of the FANG stocks there is. I agree with you 100%. However, if you believe the market is going to pull back, by any metric that you use to measure Facebook, it's expensive, right? But as a growth company that can actually monetize and make money, they're doing good. Yeah. So for me, I have no desire to be long Facebook. What I love on Facebook is it's a $109 stock that has an average true range of about $3, and the spread on the bid ask is about $2, and it is very liquid. This is my love affair with Facebook. Okay. You can go in on Facebook and catch amazing moves and make a lot of money. That's my love affair. I like it. Yeah, 2 cents. $2 because I mean $2. I'm just talking if you buy a contract, it's cost you like $2 a contract. Yeah, but 2 cents. It's like 2 cents. Maybe 3 cents, 4 cents. Yeah, we do good on Facebook, guys. It's one of the best traders in the room, right? But it is an uptrend. It's a buy the dips, all right? But today I wasn't seeing the buy the dip part. Shorting that little move up was nice. I like, especially almost any stock when you get around like a whole number like 110 is just a very good. It's just a very good number. Right now the ES is bear flagging on the 5-minute up until the 821 EMA. Okay. I'm going to do some work today. So let's look at the indices really quick and then we'll call it a night tonight. But I wanted to do some stuff. So the levels I had on SPY, guys, these are the levels. I had this level. Let's just call it this level. We are through that 0.618, and then I had this level here. So I got this range right into here, 199.98. Can go up to around 199.98 on my levels. Is what I would be looking at. Can it go higher? The squeeze is on, guys. You got a base above the cloud. So we're kind of at a key level on the SPY into a danger zone. Elliott Wave guys, the Elliott Wave guys that I trust, okay, they have said on their timing that they feel 1999. Two of them have said 1999 to the dollar, and one of them went and said it should happen on Thursday, Wednesday or Thursday on their timing models for the SPY to do a topping process. Okay. Which is why I got a little short exposure on the SPY. Not a lot. IWM is strong. It's taking out this blue line was those October lows. It's taking those out. It's in the cloud though. Ichimoku traders typically don't trade something in the cloud on the daily. It's usually too choppy. But IWM is really strong. IYT are strong above the cloud. HYG, they've been running HYG, strong above the cloud. HYG is used as a pawn. HYG is used as a pawn to run the market. Actually, Steven, it wasn't so much that I'm not confident with Elliott Wave. I'm not confident with me doing Elliott Wave. There are a couple that I really know that do it good. There are a couple that I really know that have predicted the market really good using Elliott Wave, but when I go to a lot of these websites or Twitter or StockTwits, and these guys are putting on Elliott Wave charts, I just don't think they're good Elliott Wave guys. Does that make sense? They're just as bad as I am. But for those that know Elliott Wave, there's some that are good, really good. But just in general, I guess my remark on Elliott Wave should be just in general, when I see something in Elliott Wave, I don't pay much attention to it. Because I don't know if the guy that knows. Elliott Wave is somewhat subjective. I don't know if the guy that did it is even getting his waves right. Okay? I can't get my waves right. So what's running the market? Oil. Caught a bid today. XLE caught a bid today. Squeeze is on. This was the level you wanted to watch for a break. XLF caught a bid today. Financials caught a bid up into the cloud. Be careful with the market short. Still think we may be getting into a topping process based on certain things, but boy, you got some strong charts. Financials and oil are really perking this market up. Beginning of March this happens. March this happens also. Alan, no, I don't. No. This is, I think, a short squeeze, Alan. It's mostly partly a short squeeze. They're running the they used the financials to start a little short squeeze. Now it looks like they're bringing in XLE to finish it off. Alan, I still feel the markets are going to go down. The next move in the markets, I feel we're going to take out this low. No, big money doesn't buy high, Steven. Big money was buying here. Big money accumulates here. And then what happens is they'll set something on fire, like financials or oil, on fire to get a short squeeze going. This one. I think the next test of this. So guys, you guys hear DeMark, right? You guys know DeMark? Yeah, that's how they do it, John. Big money was buying the SPY down here. Who guys here knows DeMark? John DeMark. He's really good. He has indicators out. Bloomberg. He called this bottom. He probably moved the market when he called this bottom. He said we're going to get a 10% increase in the SPY off the bottoms. We're pretty much there. He's pretty accurate. This market itself, even though you have this bottom called a W base, the market itself is still technically technically very, very, very broken. All right, there's been a lot of damage done in this market. This is not, my friends, a healthy market. Okay, this is just not. This is not a. This is a rounded top, topping pattern. See that rounded top? That's a rounded top. Google him, Oscar. I haven't followed him. I don't have a lot. I know he does a lot of stuff for Bloomberg. He's pretty. The fund's listening. He's the type of guy. He called this. He was on CNBC or Bloomberg, and he said the market's going to bottom, and he called this bottom within a few points. But then he's so well known in the fund world that it might have been the bottom because of him. So Google DeMark, and you find out about him. I don't know, Greg. I don't follow him not enough to know about his exhaustion theory. A lot of Elliott Wave guys predicted this, Peter. I'm not sure, Marcus. I haven't read his emails that much. Just don't have time. So you got to trade this market as, okay, the 0.618 from a top to a bottom, all right, is a very key level. It's right around 200. Right around 200. Yeah, it's Thomas DeMark. I'm sorry, Akun. Yeah, Oscar. Yeah, it is. I apologize. It is. I don't know, John. I don't believe. You believe something. I don't believe all gaps get filled. This one's gonna bother me though. There's a big gap fill there. I agree. I don't believe that all gaps get filled. It doesn't have to get filled this year. It could get filled 5 years from now. It's not true. Read this book. TECHNI. Let me find that book. I have this book and I read it. I've studied it. You guys can believe that all gaps get filled. They don't. They try to. Read this book right here. Okay. See how I purchased this item on April 25th, 2014? They study gaps for a, this was for a PhD class. It's almost like their paper. Gives you just the percentage of gaps that actually get filled. Not all gaps get filled. There's a gap in Apple. If you believe all gaps get filled, Apple should go to like $10. There's a gap down there. It's never gotten filled. And for those that didn't take Apple long, when it was trading at like $30 because they believed all gaps would get filled, they missed a big run. So I just don't trade that way. That gap is probably bothering a lot of people, and maybe they'll try to fill it and then sell it off. Mark Douglas, Daryl, who's that? Nicholas? Who's Mark Douglas? Who is that one? So there's some unfilled gaps in stocks that you wouldn't believe. I think Priceline has one too. I think I was looking at Priceline one time. It's got an unfilled. Okay. I think there's an unfilled gap in Priceline somewhere down there too. I'm not sure where it is, but I'm pretty sure there's an unfilled gap in Priceline. Don't know if I'd ever even see it, but it's way, way down. Way, way down. Nope, it's right there. This gap's never been filled. See that gap right there? This gap right here. It's never been filled. You see it, right? Right there. Never been filled. Now, maybe it's going to get filled. 862? Sure. But there's a gap right in here. It's never been filled. But you can see that, right? Yes, no? Can you see that? That bad boy has never been filled yet. These ones get filled. Not this one. So if anybody decided not to go long price line because they're waiting for this gap to get filled, they missed a nice move. So, no, Steven, I did not. What was your question? Steven, the central banks are making this so bad. The central bank involvement is what many that follow the stock market feel is the reason why this market could crash harder than other markets, other times in the past. Because we've never had this involvement with the central banks. Now, one of the things that one of the things that the central bank policies have done is they've made the various economies around the world much more intertwined than they have ever been before. Do you know what I'm talking about? Does it make sense what I'm trying to explain? Yeah, it's just so... The economies now are so connected. It's like, you know, one central bank does this, another central bank has to do this to as a reply to what that one does. And you just have this tight connection of all the economies of the world tied to the central banks. Right? Where we've never seen anything like this in our life. You know, as one central bank plays with a currency, it messes up the Chinese currency. They do something that then forces another bank to do something else, and there's just this vicious cycle. And now it's all eyes on the US dollar, okay? You know, our central bank doesn't want the US dollar being overly strong. And you got one of the things that you've seen a lot this year is the US dollar. Look at it. Guys, this right here is not normal. This is the ETF that tracks the US dollar. These moves in the UUP, right, are not normal. You're getting moves in a day that used to happen in a week. Okay? I mean, look at it, how it was here, just steady rise, right? Look at this. This is, you know, in 2 days you're getting what used to be, you know, 2 weeks, right? The volatility in currency, especially in the US dollar like this, is not normal at all. Okay. Right? This is not normal. This is not healthy. This is just not healthy to see this. Okay. Now, do I believe this is a short? Do I believe we're in a bear market? Yes. Do I believe this is a short squeeze? Yes. Do I believe you're setting up for a nice short? Yes. I really do. Yeah. And do I have an interest in shorting the SPY? If you want to short something, I'm telling you, you're going to make your most money shorting something at a top than you are at a bottom. Okay? And what you want to do is you want to look at your patterns. So you got 1, 2, you get this wave coming here. This wave is not going to go straight up to 212. I don't even think this wave is going to go straight up to 204. Okay? You're going to look for a short, and then the goal is to be short when it breaks this 180. Question is good question. But let me ask you a question. If you look at the ES, that was a big move on the ES, right? What has really changed in the world economy to warrant that move? Or what has really changed in the U.S. economy to warrant that move? Has the U.S. economy gotten better? Actually, data's coming out is okay. It's mixed data. My thesis is, and I could be wrong, they're running this market up to sell it off into payroll. But I could be wrong on that. All right. Okay. I could be wrong. Running this market up to sell it off into payroll. Look at the volume on the SPY. It's below the 50-day moving average. It's lighter than normal. Okay. This little last 2 days has been on light volume. Not razor thin volume, but below average volume. Oh, we got payrolls at the end of the week numbers. Friday, yeah. So look, you always want to go here. Or is it jobless claims? Let me see. It's either payroll or jobless claims. What is it this week? I think it's jobless claims. Hold on. Employment situation. We had ADP come out saying it might be up. We got jobless claims and employment situation on Friday. I think they want. My guess is they may. Yeah, they are, Marcus. I agree. They may be selling it off on that. So I'm not sure. Non-farm payrolls Friday, right? Yep. That's a market mover, guys. Yep. Can be a really, really, really big market mover. So if they wanted to do it, they're rallying it up. And if they wanted to slam it, they could put their brakes right on this rally, right on Friday. Go to Bloomberg. Make sure you do Bloomberg, guys. Because what you do is you look at it, you can click it. It's going to tell you what it is, what it should be. Okay, and give you all the stats. And Moto's saying, take a note on this. I'm going to read. Guys, anybody have any questions? I know I didn't do a really planned session tonight. ADP employment change, and they already did the ADP employment change, right? Yeah. So it's supposed to be bullish, right, Moto? That's the consensus is going to be bullish. The employment, jobless claims, it's going to be bullish. We're going to get a bullish print. Well, honestly, I don't think the VIX is overly low, but excuse me, this is saying there's too much complacency in this market. Excuse me. Remember a trade into the new year? We were buying the do you guys remember that? Into the new year, we were buying VXX calls at $19. You guys remember that? When the VIX is low, yeah, $19 we were buying VXX calls. When the VIX is low, watch out below. There's too much complacency in this market, in my opinion. Way too much. Way too much complacency in this market. Yeah, that was a good trade, Oscar. That was one of the first swing trades of the new year. We swung that into the new year. Got out too soon, but it was a nice trade. It was a very complacent market going into the new year. Now we're getting back down to that complacency level. Almost coming in the range. Too complacent, guys. Market is too complacent right here, right now. And see, I don't think Moto can answer that, Dean. Because you got to ask yourself, if the numbers are good, does that mean we're in a normal market and the market goes up? Or if the numbers are good, does now the fear come in that, oh my God, the Fed's going to raise interest rates. Let's sell this piece of crap market off. I mean, see, this is a problem, Dean. It's really hard to trade this market. Is we used to have a market when the Fed wasn't intervening so much, where good news for the economy meant the market went up, right? Now when you get good news, you don't know how the market's going to react, because you got to look at, okay, how is this going to affect inflation? How is this going to affect interest rates? How is this going to affect the US dollar? Right? Based on the world economy. So many times good news is bad news. It's like today, Dean, right? Look at the oil report today. It was horrible, right? I mean, it was absolutely horrible. And what did oil do? And what did oil do? It rallied. Why? You get bad news on oil and it goes down. Okay? So, who knows? All as you know, all as you can expect, and this is what we have to expect as traders who like to do day trade on options. Right, Moto? Talk to me. Back me up on this, buddy. Friday, if we are on the right side of the market, we are going to have a beautiful day trading options. Okay? Because the market is going to be volatile at open. It may gap up and sell off, or it may gap down and just rally hard. We don't know what's going to happen. But it's going to move, guys. So position yourself before. Now, the market has had a really nice run off that break of 1900. A nice strong run. Ask yourself this, right? Moto, see if you think I'm right or wrong. I know you don't really believe in, we can tell if it's short squeeze or not. But you got to ask yourself, when the ES broke 1900, don't you think a lot of people went short? I mean, yes or no? Do you think a lot of people went short the ES on that 1900 break just a few days ago? I mean, come on. Yeah, they did. So, and I thought, honestly, I thought with the elections, how the elections came out last night with Trump sweeping so much, I don't know. It just seems weird that it didn't sell off. But so the point is, we're going to get moves. Volatility's low. If you're trading VXX, are the futures green again? You're getting some volatility in the futures. I got to start paying attention. Oh, wow. It's not a 5-point move in the ES futures. This is what's driving the markets right now. USD JPY. Yeah, Danny, I gotta get some sleep too. Thanks, Danny. So, guys, anyone have any questions? Okay, one thing about volatility. If you're trading VXX, right? Here's how you trade it, guys. If you want to do your swing trades in VXX or VIX, but more so in VXX, you're trying to get in when it's in this low range on VXX. All right. You're trying to get in these ranges down here. This under 20 ideally, like 21. You put your swing trade in. All right? You put it in. You're paying like maybe $1 something per contract for a monthly, maybe 2. You're going to take your losses 50-60% losses if you're swinging it. However, once you're doing it to catch the big moves when they happen. Does that make sense? You're doing it for your big moves. Does that make sense, guys? If you're in VIX, you want to try to catch it down here more in the $20 for your swing trades. And you may have your 50% losses where it just moves sideways, you do nothing, or it drops more. But what you're going for is these big moves, catching the waves. All right. If you were in VIX here for 3 weeks in a row, if you had bought here, right? So let's say you bought in July, mid-July, and you bought the August monthlies. You might have been down 70% on that option. Or let's say you bought the September monthlies. So in July, you bought the September monthlies. You might have been down 70% here. And then look what happened. Right? See it? Trust me, you'd be down. If you bought right here, you'd be down 70% based on time and directional. But then you catch that. Okay, that's what you live for when you're trading VXX. When you're trading volatility. It's the same with here. You were kind of getting crushed right here, right? And then boom. And then you're getting crushed again. Then boom. And this was us. We entered somewhere here. I'm just like, you know what? I want to see if I can catch one of these moves. But the risk when we entered in December was we go back down here. Well, you're down 80%. But then you catch this. Alright, it's about risk reward. And going into a position size that you can manage it. Okay, guys. Any questions? If not, I want to wrap it up a little bit early. I got a sore throat coming. My throat's getting really sore. Thanks, guys. Dean, Ron. Moto may have something. Hold on. Yeah, I will, Michelle. Yeah, sure. Let's look at an OI play. So, guys, I'm going to look at an OI play. All right? Maybe one moto, though. My throat is sore tonight. Or I'll have to grab some water before I can do it. All right. What are we looking at? Which one? I can't see it. What am I looking at? I can't click the links. What stock is it, Moto? I can't click the link. Kate? Oh, this retail is doing good. Kate Spade doing good. Retailer. You're looking at under 20. Are you looking at the weeklies? Or monthlies? Monthlies. Oh yes, that's all I got. Under $18. $18. They didn't do good on earnings? I thought they did. So under 18? Is that what you're looking at? So try to scalp puts. So we'd be looking at the puts, right? So he's noticing a lot of call OI on Kate. High watch, guys. High watch. I want to put this on high watch. This is a squeeze. No, I don't know. Daryl, depends. Let's see how this trades. This is high watch tomorrow. This is high watch tomorrow. Not only that, you're coming right up here too. Look. High watch. I don't know what the spreads are like during the day. High watch. High watch tomorrow, guys. Spreads are in. Oh, it's okay. Spreads on the puts are okay. Spreads on the call are bad. We can do this. We can do this. Actually, this may be a good one. This is I would say this is a massive short squeeze. What's at 2265? It's been resistance before, right? W watching moto. Right. Yep. I'm gonna be watching that 2267 level. Been resistance before, could sell off. Outside the Bollinger Bands. This is extended. Yep. Right there, 10 cents from the top. It could be a really good play. Nice fine moto, thank you. We'll watch that in the room tomorrow. All right, guys. Have a good night. If you guys don't mind me chatting, if I talk any longer, I'm gonna have to get some water. And Moto, thank you again. Let's see if we can get a trade on this, guys. This one looks like it could be, especially if the market pulls back, right? If the market sells off, this could be a really, 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 really good one. They went from 632 to what? Oh, nice. 180. 1650 cost 32 buck 80. Nice. Nice one, Michelle. All right, I'm gonna wrap the session up.